Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Finolex Industries, one of the marquee stocks of the rally between 2013 and till 2017, but now is dwindling down to what to a fraction of what it was at that moment. So let's understand why that happened and what needs to be done in this stock. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about Finolex Industries. This stock or this company was established in 1981, and this is a play on the economy in the manner that it produces pipes. So it is a market leader in PVC-U pipes, and they also produce agricultural pipes, casing pipes, solvent, cement, and plumbing equipments like pipes, etc. And it is a renowned brand. It is one of the most renowned brand in India and probably the market leader in its segment. So anybody who is building say a house or even industry would want pipes of Finolex to be employed in that building. So as you can understand, this is a pure play on the construction segment, and if the construction goes big time in the region, then Finolex sales would go up. It is a pan India play, and the best part about it is, although it is an infrastructure ancillary company, it is a construction ancillary company, the debt is not very high, the debt is low. So now we talk about the numbers of the company, and this has been the main reason for the fall in the stock. The sales are up only 13%, and normally over the period between 2014, that's FY14 to FY17, the sales was growing at between 20 to 23%, and the profit went down 37% owing to higher expenses, higher fuel cost, and there was expenses in terms of they were using more of their reserves in order to reserves or whatever they had in the go down, so they had lesser reserves, and there were expenses owing to the depreciation that we talk about. So the profit went down 37%, and mainly it was because of the lower sales, because normally sales was to come up about 25% higher. So you can owe that to that thing, although they have low debt as I explained, and it is a positive, but they need to produce good results, and the profitability need not go down. When somebody is investing in a firm, they would want continuous growth, even if it is of 15%, 18% at least, but growth on the bottom line. And that's not what is being seen in Finolex Industries or its peers, or in companies related to construction and infrastructure. And what is even more damaging, what was even more damaging was the fact that the margins have declined sharply to around 7.5% to what it was 13.3%. So the margin has declined around 580 basis points. It is not that just a 10 basis point or 20 basis point dip year on year. The margins have declined 5.8%, and the gross profit margin, this is the net profit margin that I was talking about, which has gone down to 7.5%. The gross profit margin has reduced to about 11 from 21.5%, which is tremendous about a year back, to 11.3%. So what has been the reason for the stock fall, or reason for the bad numbers that we have just seen? Basically, it is slowdown in the Indian and global economy. So they have, I mean, businesses from abroad as well. But the Indian economy slowdown is really hurting the company, because major part of the business comes from India, and the major clients are from India, and majorly they are catering to the retail players, so to houses. And if the construction work goes down and there is no plumbing work around India, or lesser amount of it, then their business would get hurt. uh, infrastructure and real estate stress is even more extreme than you could say in the consumer durables or in FMCG sector. And you can see that over the last 6 to 8 months, over last, you can say 3 quarters, 2 to 3 quarters, the stress is very much visible, and government is taking a lot of steps to get things right. But even with that, it's going to take time for this to really revive and infrastructure to pick up. uh, very, you can say, very considerably, and in the fact that it is pretty obvious that there will be dearth of orders. So what is happening is people are now understanding that over the next 2 3 quarters also, Finolex Industries might not do well, because the order pipeline and the order book is not that strong as it used to be about 2 to 3 years back. So that has also left a mark on the stock, and the stock is falling. Plus, in 2017, as with all the mid and small cap stocks, the valuations of Finolex Industries were very lofty. It was trading at around 30 times, 33 times earnings, and it felt like there was a bubble being built up into these stocks, and hence it had to fall from those levels. I think the high the stock made during that period was around 750 rupees. Right now the stock is at 530, 540 rupees. uh, but the major aspect of why the stock is falling and nobody is willing to buy stocks of real estate, infrastructure, or ancillary firms like this, or other electricity ancillary firms and the electric firms, is because the prospects of recovery look bleak. So it doesn't look like that the recovery would come in a V-shaped manner, and probably after 1 quarter, say from the December quarter or from March quarter, the numbers would be very good. It feels like the next 2 to 3 years could be very difficult for these sort of companies. And and attached to it, that there is no, you would say, attraction towards the sector, and people are moving towards export oriented sectors like information technology, pharmaceuticals, or even stocks which cater to US and Europe, rather than India, because the dollar rupee rate has changed, and now we can see that the oil prices has spiked. So what will happen is their raw material cost will go up. Companies like Finolex Industries will feel the pinch for the next 2 quarters. So that has even put a more dampener to the already difficult situation that these companies are going through. So, what are the reasons to avoid? And I believe that you need not get into this stock or stocks which are related to Indian economy at the moment. And I'm stressing this fact time and again in my videos. This is because it is always a case that when the stock fall big time once, then people start buying it in the hope that the economy will revive one day. So not an issue, will buy, will sit for 5 years. But suppose you buy at 520, 530, and the stock falls, suppose 15% more, and goes to 400, 350. What happened with one of the beauty products company, a very small cap company, that went from 700, which felt like a low level, and that didn't, means it didn't stay there at 700, and it went to 350. So it halved even from there, and the valuations have become very, very, you can say, attractive at the moment. So there is no foundation or no restriction in having Finolex industry go down to a level of say even 250, 300 if the results are not good enough. So one needs to avoid, and don't look at prices. If even if it goes to 600, you should think that the stock is expensive because the numbers might not be good. Let the numbers come in, because the valuations are still stretched. You might think that it's trading at 14 15 times. What if the profitability dips even further? Then the PE would go up, because it relates to earnings, and if the earnings dips, the price to earning ratio would go up. It is quite simple. So then the stock may fall even further. So let earnings come up, and the better option would be to look for other sectors. When I talk of other sectors, even if you don't want to look at information technology or pharmaceutical for the time being, and you want to look at the next 5 years, and want to be in the same sector and not get away from the sector and buy the even buy Finolex industry, then you wait it out. Don't buy now, wait it out for 6 to 8 months, let 2 3 quarters pass by, let the stock fall more, because if the numbers doesn't come up, then the stock will fall. And if the numbers really start going through the roof, and the economy revives immediately, or if there are government incentives, you might as well buy at 600 rather than buying at 540. Why I say that is because when you buy at 600, you would know that there are some fundamental changes that have taken place and you will be assured of the downside. But when you buy at 540 in the hope that the economy would go up and would be rectified by the government, then you are at the mercy of the economy. And that's why I put that title at the start of the presentation, that you need not be at the mercy of anything, any external factor. Because what happens if there is a war escalate if war escalates in the Middle East, if there is something that happens externally out of India, then these companies will suffer, mid cap and small caps will suffer. So it's better to have cash in hand if you want to invest in mid cap and small cap, or buy incrementally into pure consumption play, and not stocks which are more related to infrastructure or capital goods or real estate. uh, so let the numbers come in, and work on the ground needs to be seen. So it needs to be seen that there are a lot of construction work going on, and you can see in your city whether the pipes are selling big time, or there's a lot of construction work, then the pipes would sell and the sales would go up. So the slowdown need to pass, and then you can put in money into stocks such as auto ancillaries, infrastructure ancillary, or electrical ancillary stocks. Basically, it is a pure economy play and a construction play. Once the economy picks up, construction picks up, these sectors pick up, stocks like Finolex Industries would really do well. So this was my video on Finolex Industries. Please like and subscribe my channel and hit the bell icon so that you can get my video straight away when I post it. And thanks a lot for watching, and kindly share my videos as much as possible so that we can spread the news of investing very nicely into the stock market and making money. Thanks a lot for watching.